We're joined by Lily Fang, Assistant Professor of Finance here at INSEAD. We've just had a session here about women as investors, which was a pretty popular session linked to International Women's Day. Do women make better investors than men?
Actually, the evidence on whether they are better or not is sort of mixed. I think really what you can say is they are very different from men. And what seemed to be very consistent across a large number of academic studies is that women seem to be more risk averse. So in the sense that they will trade less than men, and they will have a more diversified portfolio than men, and so forth. But then when you look at the actual performance, I think the statistical difference is much weaker, to the extent that individuals in general, don't outperform, let's say, the broad market index, like the S&P 500 or something like that. You might say that, well, the more you trade, the more you lose out against a passive index. So in a sense, compared to men, women might lose out a little less because of the trading. In fact, this interesting paper by some professors in University of California, they do demonstrate that before trading costs and transaction, all these transaction costs, men do slightly better than women because they take higher risks, and always higher risks is rewarded with higher returns. But after you take out the transaction cost, the net, in fact, men are slightly worse than women. So, but the statistical significance is a little bit small. Then you look at professional women investors. They do also exhibit the same type of trade. They seem to have longer holding horizons. They trade less frequently. They seem to be much more consistent in terms of their investment style rather than churning their portfolios. The performance, however, there doesn't seem to be a lot of difference. But again, you have to take that with a grain of salt because these are very selected. Women already account for a very small proportion of this population. So maybe because of the sample size or something we can't measure, but we can say that women is very different from men.
And when you're talking about the population size,
right,
you're talking about the financial community,
right, right,
which is very much a man's world.
Right, exactly. So again, with these studies, it's also very hard to control. Okay, the women who entered this field is a very select group. Does it really represent the overall gender? I think that's why the academics are particularly cautious about saying who is better, with a smallish type of sample. But what we do see is that women trade more cautiously. They are more diversified, and they definitely, to the extent, there's so much other literature that demonstrate that both professionals and individuals don't overperform the market index. Then in a sense, you want to preserve trading. You don't want to trade that frequently. So that's why sort of men, after cost, they tend to exhibit sort of lower returns than women.
Do you think that women would steer towards, say, blue chips, bonds, which are going to be reasonably stable, give stable returns, and not have a sort of great risk factor attached, whereas men might kind of try to find something more volatile that's going to make a quick buck?
There are, indeed, I think there are some evidence in that. If you look at just within the stock selection, stock portfolios of men and women, men tend to select smaller stocks, smaller companies that's lesser known, and they are more risky. And overall, though, they do have higher returns. So that's why I said earlier that, before costs, men's portfolios seem to do a little bit better, and women would stay with blue chips. And then in terms of asset allocation, so go outside of just stocks, you do also observe that I think men would probably put higher proportion with the same age, men and women. They probably put higher proportion of their wealth in the stock market versus something that's very safe. A lot of women, I think, they trust safer instruments, even very low yielding, like bank accounts and things like this.
I was going to say that if you look at the rogue traders, they're all men, but we haven't had that many rogue traders that we've known about anyway.
Right. Again, I guess there is a very, very small sample. You have, millions of traders out there, and then even within that, you have a very small fraction that become rogue traders, and it really is very extreme. And I don't know whether it's just a matter of time before we see a woman trader who would blow up. But I think, you know, there are deep-grounded, you know, sociological, psychological, you know, things that make women perhaps more cautious. And, you know, I think even the professional trader, she probably is much more concerned with the limit, you know, the sort of limits and compliance with the losses, the trading losses within the bounds and so forth, than maybe a man. I think there are so much other things going on within in the trading floor as well. I think maybe just other things like competition among the traders and things like this might make a particular trader very, very aggressive. And I think women, perhaps by having a smaller presence in the first place, and then secondly, maybe more in general cautious, they have a less likelihood to sort of become a rogue trader. Yeah.
Anthropologists would say it goes back, you know, thousands of years to when men were hunter-gatherers and the women were at home with the children, and taking a long-term perspective.
Right. I guess that I do think that it has a lot to do with that, because, you know, men used to be, they go out to hunt, and the only goal is the short-term target.
Find food in the evening, basically.
Exactly. And whereas women, I think we are essentially, for millions of years, we're essentially ingrained, there's this thing ingrained in us that we need to preserve for the longer run. There are lots of, you know, I think this definitely has something to do with that.
And nowadays, planning towards retirement and kind of making sure you've got those sort of education funds for the children.
Right. I think for the women who are thinking about those issues, so the women who do invest, I think they would take a longer perspective. But it's very interesting that we should, when we are discussing this, you know, women investment issue, I think you have to put this in a bigger picture, in the sense that here we're talking about, are women better than men and so forth, but that's already conditioned on the women who are willing to or actively thinking about investment in the first place. So all the evidence is showing that the women who do think about investment, they're actually quite good at it. They are maybe better and at least no worse than men. However, the sad thing, I mean, as we have been saying so far, is that why do women account for such a small percentage of the investing population? It's I think you know, by only focusing on whether women are better than men or not, we're missing a bigger point, which is that a lot of women don't actually actively think about investment where they actually should. A lot of women think about maybe they are just very passive in a family arrangement. Maybe they leave it completely up to the men. And I think that there has been recently a book that talked about, essentially the main idea of the book is that a man is not a financial plan. So I think that's actually very, very important, you know. So while we think about whether women are better than men, I think we need to keep in mind the bigger picture, which is that, you know, 80% of the women actually don't actively engage in their own financial planning. And this is a particularly important issue, long-term financial planning for women, because people are living longer, and women in general have longer life expectancy than men. And you know, so in old age, women tend to be afflicted with you know, long-term disease like osteoporosis and arthritis and things like this. And there has been some statistics that on average a woman can expect to live 10 years or even more essentially on her own. And so if you don't have a financial plan in place that you started thinking a long time ago, once you get there, you know, a lot of people were just shocked. And I think that's something that we really need to educate people about.
So what advice would you have for women then who might be considering looking at financial planning? So
I think really the first and foremost thing is that it's never too early to start planning. And the idea is that essentially when you sign up for your first job, you basically wanted to start to have a financial plan. You never want to just hand. A lot of women have perhaps a barrier. You know, they don't want to think about the money, the numbers, the investments, and they leave it up to the men. I think it's in fact very important for the family, both the man and woman, to do it together. And all the evidence we have is that as a team, the man and the woman make decisions together. It's much better than just the man doing it by himself. So she should really be thinking about not only just, I mean, it's good for the family that she's participating in this, and also for her own, you know, longer planning as well. I think it really is first and foremost start planning early on, and then, you know, it's there are many, you know, kind of general rules about investment, which is that things like you, as your life stage changes, I mean, clearly your portfolio should look different. As a younger person, not married, single person, you probably can take a lot more risk in terms of having more stocks in your portfolio and lesser bonds and so forth. But as the life stage progresses, you might want to change that portfolio composition. So these are the things. I think there are so much you know, detailed advice out there. I mean, there's self-help books, there are seminars, there are many different things, and always you know, people should customize their portfolio to their needs. But really, I think the most important thing is for women to plan early, and that's something that I think institutions, financial institutions and educational institutions have failed to do, because 80% of the women, you know, are not actually actively planning for their own financial future.
But you would say that they should really get out there and get good financial advice?
They should. I think a lot of the evidence that we had saying that women is maybe better than men, at least no worse, it really should give women the confidence that, you know, they're perfectly capable of taking charge of their financial well-being. And we need to get that message out there so that people can start doing the planning. And then it's a matter of educating yourself. And one thing that's good about women is psychologically, when people did a survey about how do people educate themselves about investment, is that women are, when they do have a knowledge gap, they are more willing to acknowledge that. They will say, oh, I don't know about this, I want somebody who explain it to me. And whereas men, they might actually mask that problem. If there is a gap, they would just ignore it, you know, or pretend that it's not there. So that is precisely why, you know, I mean, for a woman to leave it to her husband is really not a good idea. She should really be participating, because this is for her own benefit, but as well as for the larger benefit of family as well.
Okay, so Lily, Fang,
yeah.
Thanks a lot for joining us.
Okay, thank you.